Okay, what's going on, guys? GK the Trader here. Today is August 15th, 2023, a Tuesday. I'm going to be reviewing today, obviously. You saw my executions prior to this short little review here. So I'm not just like coming back in hindsight and, just pointing out everything that's already happened. But yeah, nonetheless, let's just get straight into it. So I'm going to go ahead measure out this daily order block here. You can see we almost get to the midpoint there. We respect that lower quadrant of it, so that's always good to see. But I'm gonna mark out the opening of it just to denote how we just kind of traded up into it to accumulate more shorts on the daily time frame. And then not only do we have that order block, we have this wick here, this daily wick. You see we worked up to the midpoint of that right here. See the beautiful precision on that right there. So now that we have our daily time frame levels marked out, I'm going to go ahead and just drop right down to the 1 hour time frame. And you can see those levels there. I can take this off now. So not only right at the end of Monday and going into that midnight opening, we accumulate at that daily premium array, but more specifically this 1 hour sell side imbalance, buy side inefficiency. And then also you can see we traded up into this 1 hour order block here, this up close candle prior to this aggressive move lower. So you can see that right there. And then from the midnight opening, we create this intermittent term high, leave this intact, and then we aggressively displace lower going into the New York session. So this here showed me that we had a willingness to want to go towards the sell side here, these relatively equal lows, and the main draw would be previous week's low right here. Okay, there we go. So, see this very large wick up here? We didn't get up into this imbalance here because from this low here, it's offering buy side, and then it completely overlaps that, trades the Hoy down. So technically, from this low, the Hoy up here, this should act as a balanced price range if it's going to go lower. And you see the low there, how it just kind of bumps up into the low and then trades off. Now, it could have dipped up into the lower quadrant here, but you'd want to see it quickly move away from that area and then trade lower if it were to trade up into this area here. Obviously, it didn't do that. It failure swing right here. I'm actually going to go over to the NASDAQ real quick. You can see the NASDAQ did dip up into that balanced price range, but what did it do? It instantly wicked off aggressively as soon as it got to that balanced price range. So that's a signature you would want to see for lower prices. So I'm going to go ahead and drop down to the 15-minute time frame now that we got all that established. So obviously you saw that we failed to take out this high here. If we look over at NASDAQ here, nope, not bars, candles, there we go. You see right at that 930 high, NASDAQ did take out this buy side high right here, failed to do that on ES, so that would be our SMT divergence. Just another confluence for our trade to give us more confidence in taking shorts. So these two highs right here, those are both anchored on this 15-minute imbalance right here. You see how we trade up into it here and then smack that low of it and trade off. And then also we have this inversion, 15-minute inversion fair value gap. So I'm going to take this off here. You see the beautiful precision on that. So once we trade lower at 8:30, what does it do? It matches this low here, leaves these intact to create more liquidity at the opening to then later attack the lows. So if we drop down to the 5-minute time frame, if we take this 8:30 opening here, right here, so you can see how we trade higher above the opening. This would be our opening range judo swing. Get sucker traders in to get long, and it invites liquidity higher, takes out these internal buy side highs right here. See that? And then we create that SMT divergence. And then NASDAQ used that 8:30 opening to take out the buy stops up here and dip up into the imbalance. So you can clearly see how they utilized that 8:30 opening here this morning. Now, before I dive into the good stuff here, I want to take your attention to after we traded into those daily premium arrays up here. You see we had a shift in market structure on the hourly time frame. You see how we trade below the swing low here. See that? And then we get our judo swing higher, and then we get our setup. So this market structure shift was an important part in trusting me going lower. So back down to the 5-minute time frame. You see we have a 5-minute shift in market structure after the 9:30 opening when everyone's trying to get long. They're chasing the movement higher, and they swiftly get taken out. So after we get that, wrong tool. After we get that displacement here and that market structure shift on the 5-minute time frame, you see how we retrace up into this 5-minute imbalance, and this is what I use to get short, as well as this inversion fair value gap here. See that? Now, the fact that we even aggressively traded this low and got the whole way down to the lowest inefficiency, that's already showing weakness and helping me trust that we're going lower. And the fact that we came down, matched this low, left these intact as relative equal lows. And not only that, there's going to be sell side resting below this 8:30 low, while we already have a higher time frame draw on liquidity, which is this red shaded line right here. So sell stops below that 8:30 low from those who bought early. I accidentally spelled stops wrong. There we go. So we get this shift in market structure. We shift below the swing low right here, and then we dip up into this inefficiency, and we respect the balanced price range. So let's go ahead. Actually, before I drop down, these two lines right here, this would be that Sunday opening from this Sunday, obviously. So you see how we offer price above that once more to accumulate more shorts above the opening, and then we trade lower, also above the 8:30 opening as well. As I always say in my videos, the best shorts are going to be above the opening. The best longs are going to be below the opening. So with that in mind, let's drop down to the 1-minute time frame. And you can see basically my initial short was midpoint of this inversion fair value gap. Once we traded back down to it and then slammed back up into it, that's when I went short. As soon as we wicked off here, that's when I went short at this candle right here. Obviously you saw the executions in the beginning of this video. And then this small little imbalance here is when I added an extra contract on, so this would be a 2-contract trade. Full take profit down here for 10 handles. And then my short was also within that first New York session macro. Why is that important? The macros is what it likes to, it starts the move that then targets sell side. within these macros, specific time macros. So if I actually just extend this out through the entire range here, you can see when did the move to sell side take place, right within that macro. See that? Perfect precision. Also, another thing for the short, I have to wait until we get up into a premium. I always say this during my live streams. See how we got up into a premium here? Right in that blue shade area, which is the premium. Got to there, so now that we got to a premium, I was able to trust getting short, so we traded down here, and then I got short right here. And then before I end this, there is one more thing I want to add in here, just for like a little bonus, I guess. If we go to the 15-minute time frame, and then go to regular trading arc, you can actually see right at that 9:30 opening when we wick up. What do? We wick right up into this breaker here. And you would not, this is like a hidden breaker. You would not be able to see this breaker on a regular chart. So that's why I had to switch over there. So if we switch over to the regular chart, it would look something like this. So there's that regular trading hour premium array there outlined. So sometimes premium discounts rates, they're easier to see on regular trading hour gap in short. So there's that. So you guys saw how we went from the whole way up from the daily time frame down to the 1 minute to explain everything, the short, why I took the short. My voice is getting back to me, so I will be live streaming tomorrow morning. I'll see you guys there. If you found this insightful, go ahead and hit the like button, please. Follow, whatever else you got to do. And yeah, I hope this was a clear, straight to the point explanation